Hey everyone, in this video we're going to go over my weekly portfolio update from my Grow My Portfolio 2020 challenge, and then we're going to talk about a stock I've been looking at, SHAK, and we're going to see if I'm buying it. So this is my portfolio. It's a mix of growth and dividend stocks. Right now I'm participating in the Grow My Portfolio 2020 challenge, where the goal is to get this portfolio from where it is now to $25,000 by the end of this year, by December the 31st. And that's no matter what happens in the market. Now, I did have a couple of setbacks this week, like car trouble and doctor stuff, but we're still on track. Now, normally what I do is every month I deposit $1,200 into my money market, and then from that, I take $200 from that money market and I deposit it into a dividend-paying stock. That's what I did this week with Bank of America. I tried to pick the dividend position that is lowest on its 52-week scale. Now, I will tell you, I did have some trouble this week. I didn't know whether I wanted to do the 200 or not, because stocks have been going kind of up, and I kind of been, trying to decide whether I want to continue doing the dividend stuff or whether I should hoard cash and make some smarter investments. But this week, I did my 200 in Bank of America. And then I also bought 10 shares of Tapestry. A few weeks ago, I put in a position of 60 shares in Tapestry at $13 and I think 84 cents. My original idea was to wait for it to drop to $12 and then add 30 more shares. However, I mean, it's been doing that thing where it's dropping, but not too much, and it's not been raising too much. So I think yesterday or the day before, it dropped to $12.96, and I bought 10 shares. But anyways, let's go over my positions real quick, and then let's get into the main topic at hand. Bank of America down 5.15%. Cloudera up 92.99%. Wish I bought my shares when it was lower. Cisco up 3.72%. Facebook, we are up 33.89%. Realty, we are up 19.09%. Pfizer, we are up 1.14%. Qualcomm, you're up 17.99%. Damn, that's getting real good. And 5G ain't even out yet. Revolve, we are up 25.62%. Sony, we are down 1.35%. AT&T, we're up 1.12%. Tapestry, down 5.22%. And Uber, we are up 24.30%. That gives me a total equity of $16,544.62, and I am up 11.07%. So my friend Secron Capital, a fellow YouTuber, he told me about the stock as a response to an IG post. SHAK can be described as a roadside, fast casual, fancy hamburger and shake restaurant. It's one of those where instead of a $3 hamburger that you get at the Mickey D's, it's like an $8 or $9 hamburger or above. Now, we don't have one of these in Ohio, but everyone I talked to said it's really good. The very, very short version of SHAK history is that they started out as a hot dog stand in New York City. Everyone loved them, and then they were granted their own kiosk. Well, everyone loved that, and then they were able to open their own restaurant in 2004. And then from there on, they kept growing and growing and growing. I think right now they have restaurants in 30 states, plus countries like Bahrain, Hong Kong, mainland China, and Japan. And I just heard that they're also looking to build even more restaurants in South China. So they are an aggressively growing company. One thing I like about them is that, at least according to their 10K, which you should read, don't just watch this video, you should read their entire 10K before making any decision. They seem to care a lot about their employees and their customers. They promote from within, they promote a 4-day work week, they're focused on LGBTQ+. Their CEO, Randy Garutti, I think I pronounced his name right, he has no problem siding with Black Lives Matter. You can read his tweets. They're trying very hard to be on the right side of things, and I can respect that. Now, I don't know how genuine that is or not, but they take up a huge portion of their 10K talking about it, so they seem to care that much. Their income statement has been showing some pretty nice revenue growth over the past couple of years. I think from 2017 to 2018, that's 28% revenue growth, and then from 2018 to 2019, we're talking 29% revenue growth. They also have a pretty amazing balance sheet. They have a lot of cash on hand for a company of their size, and then they have no debt whatsoever. They have more assets than liabilities. I mean, what's not to love about the balance sheet? It's fantastic. They are bringing in a nice chunk of change from the cash flow. However, they are spending all of it in capital expenditures. Like, they are really growing aggressively. Like, that's their whole vision, is to open more and more stores. Their same sales stores, they decline a bit year over year, or they stagnate. I think that's the same. I think that's just how restaurants go. When you open a new store, it does amazing for a bit, and then it stagnates. So most of Shake Shack's revenue growth has been through opening new stores, which they've been doing constantly. So as a company, they've been doing very well these past couple of years. Their price is a little high, as you can see by their trailing forward PEs, but other than that, what's not to love? Well, nothing until COVID hit. I mean, COVID hit and that absolutely fucked them up. I mean, Shake Shack is it's a physical business, right? It's not, I mean, they have an online portion of it, but most of the stuff is in store. So they are incredibly reliant on people going in and buying shit. And during COVID, I mean, most of the stores were temporarily shut down or reduced to curbside service. They had to furlough workers, and they had to draw down $50 million in credit to fund their stuff. Then they had the whole debacle where they took in $10 million, a $10 million loan from the government for the CARES Act, but then they gave it back because, I mean, that loan was meant for small businesses, and Shake Shack has a $2 billion market cap. I mean, for a company that's been focusing on aggressive growth, yeah, that situation struck a major blow. The revenue didn't take that bad of a hit, at least not for their last quarter earnings. But as far as their net income, they took a loss. But are they worth saving? Like, is there turnaround potential? I'm more of a value investor than a growth investor. Like, you show me a company with a bright future and things are going well and there's nothing wrong with it. I don't want that. I don't want that. I want a company that's got the shit beat out of it with turnaround potential. Is there a turnaround potential for Shake Shack? So I like to believe they have a chance of turning things around. I read their latest transcript from their earnings call. Randy, the CEO, he talked about, while they did take a massive shit in sales for this past quarter, they are seeing sales slowly start to trickle up as stores start to reopen. Not only that, but they started right back on the aggressive growth path. Like I mentioned earlier, they're opening the new stores in South China. They're talking about opening more stores in the U.S. So they are trying to get back on the growth path. Not only that, but they paid back the $50 million that they borrowed in debt last quarter. They already paid it back. So they are back to no debt. However, how well that recovery goes depends in large part on how the economy bounces back. For example, New York City, one of Shake Shack's biggest markets, is still not fully open yet. Like, they are still missing out on the revenue that they need until, like, New York actually fully reopens. As a matter of fact, a lot of the states with their biggest markets are still kind of shut down a lot. So I appreciate what they're trying to do, but the execution is going to be a little rough, and it's going to depend on a lot of things. From the latest news that I could find, although they did pay back the $50 million they borrowed, as of right now, their same-store restaurants are still down 59% in traffic. Like, they're still showing a 49% decline in same-store sales. Like, they are gonna hurt. Their next quarters are going to be an absolute nightmare. If we take a look at these analyst estimates, I mean, they're expected to go from 0.72 EPS all the way down to a negative 41 by the end of fiscal year 2020. And look at this EPS trend. Every time analysts take another look at the stock, they move the EPS estimate lower and lower. They are going to have a very shitty year. Now, they're expected to bounce back in 2021. However, the analyst estimates keep going lower and lower and lower on that as well. If Shake Shack can get through this shit and get back on the growth track, then I think they're going to explode. But they really need to get through this, and that is dependent, very largely dependent on the economy. So I just said a lot of negative stuff, but despite all of that, I still believe in this company. I still think they can bounce back, that they can get through this, as long as the economy does. So yeah, I do believe in the company, I do believe in their long-term growth, and I do believe they can bounce back. Now the next question is, if I choose to buy them, what price will I go in on? Well, that's been very difficult for me to answer. Like, this is a very atypical company and a very atypical situation. If I go just by EPS and price to earnings, I mean, I'm looking at maybe $20 as a fair value, and that's already way too expensive. Now, if I decided, I tried to go with discount cash flow, which is another method, a very involved method. However, because of their capital expenditures, they are producing negative cash flow each year. And not only that, but the analyst estimates from Yahoo, after the next year, they're expected to decline 15% each year for the next 5 years. So that is, I'm having a really hard time coming up with the price to go in. So right now they are trading at $49.05. Their 52-week range is $30 to $105.84. I think if they can drop to the mid 40s, the early 40s, maybe 43, 42, I could start a small position. Hey, this is editing Matt here. So with my PE calculation, I came up to 1244. However, I don't think the stock price is ever going to go that low. That being said, I think the 40s are too high. I'm going to need to see 30s, especially given the risk I'm taking with the stock and the chance that it might not bounce back. Forget what I said about the 40s. I need to see 30s before I can start a position, and then it drops more. If it drops more, then I can add some more. Thanks and carry on. I mean, the trailing PE is 107, mostly due to the low EPS, and the 4 PE is 416, mostly due to the expected intense drop in EPS towards the end of the year. So in short, I think it's a great company with a great future if they can get through this shit. I mean, this year is going to be absolute dog shit for them. Next year might be absolute dog shit, depending on what the economy and the whole COVID lockdown situation does for them. But what do you think? Do you think this is a company worth buying into? Would you buy now? Would you wait? I mean, they do have earnings coming up. The price might drop after that. I mean, unless it doesn't. I mean, the stock market does weird things. But anyways, I hope you found this enjoyable. Thanks for watching. Eat your vegetables.